technological stocks. So they are kind of fluctuating in very narrow ranges, meaning that the money is not going to cyclical assets, meaning stocks and cryptocurrencies. The big money tries to go into the debt market because yields of government bonds of the United States are getting higher and higher and higher every day. So, for imagine yourself a hedge fund manager, a big hedge fund manager. So, what would you invest in? Because as you see that the stock market is going down, it's moving down and down and down. Well, yes, the inflation is 8% on annual basis, but you want to at least not lose your money and hopefully to gain something on the yield. So, of course, you will invest in bonds probably. And okay, so we will touch this topic later. What else do we see? So this is quite complicated chart, but what I wanted to show you is the probabilities of the interest rate for December. So as you see, we have the orange line here going 100%. It is literally 0.85 450, so that's a two-step hike. So market is pretty sure that we'll have two-step hike in December, and probably we'll have three-step hike if the inflation will remain to be such as it is now. So that's what it is. So interest rates are going up, right? And the balance sheet of Federal Reserve is diminishing. So Federal Reserve is cutting its balance sheet, meaning that they are trying to tighten monetary conditions. They are trying to absorb capital from the economy by raising interest rates, by selling their positions in the debt market. So previously, as you remember, in 2020, Fed was bringing stimulus to the markets, trying to protect the economy from the COVID. They were buying bonds from the market, I mean treasury bonds, American bonds. They were buying it, buying it, buying it. So the bond market was really stable back then because Fed was investing a lot of money in the bond market. Now they're unloading their positions, so that which we see the declining balance sheet, declining balance sheet. That's what we see. Okay, we have some questions here, Q&A. So I will answer those questions later in the webinar. I can speak Urdu, sorry, so I speak only English. That's why maybe later questions might be translated. Gold analysis. Okay, we will touch gold. All right, we will touch gold. Okay, so this is the trend, right? And another most important trend. Every day, when you open up terminal, when you open up Bloomberg, when you open up a website, CNBC, for example, you see yields of treasury bonds in the United States going up and up and up, meaning that bond prices are actually moving down and down and down. And for example, this is a snapshot of today's yield for 30-year treasury bonds. It's already 4.35%. Well, the inflation is higher, of course, but 4.35% is something. So if you remember that in the beginning of the year, yield of 30-year treasury bond, the American bonds, were below 2%. It was very small, so nobody was going to buy those bonds because it didn't make any sense back then, and money was not going there, so that's why money was going to stocks. But now, every day, as you see, this chart is going up. It's going up. It looks like a bullish market, like a stock market, but actually, it's not stock. It's the yield chart, meaning that the bond prices are going down. So that's a little bit of a context. So big money goes into the defense. Okay, it's going into the defense. The United States particularly is, I mean, the leading economy right now in the financial markets, whether we like it or not, but it's the leading economy. And if recession happens in the United States, of course, we feel it in all parts of the world, including Pakistan and all other countries. So, what do I mean by that? 90%, 96% of the probability is visible on the chart of a conference board. So that's the famous recession metric, recession indicator. So we see that it's almost 100%, and not only that, but the other indicators are also visible. They're also flashing the recession. So payroll employment in the United States is still positive, meaning that every month the economy is showing quite substantial strength. So new payrolls, new employees are kind of uh, visible in the statistics for the United States, but this number is actually moving down. It's not going up; it's moving down. But actually, this is still positive. So those numbers are still positive. We don't yet have negative numbers. So meaning that payrolls are not negative. So people are still getting more jobs every month. So this is a good sign. Actually, the labor market in the United States is actually good. It's quite strong. That's one point, right? On the one hand, we have inflation. On the one hand, we have probability of recession. On the other hand, we have strong labor market, strong employment. Okay, another important metric which flashes the recession is the manufacturing PMI. PMI is Purchasing Managers Index from the United States. And basically, if it holds above 50, it's considered as a break-even line for the economy. So it's considered as a break-even for the economy, and that's actually good. And it was above 50 for a long time during this year, and actually in September it started to go down below 50. So now the current reading of PMI is 49.90, meaning that it's below 50. It's slightly below 50, but it's still negative. So the economy is underwater. So indicating that Purchasing Managers Index is still, is below 50 for the first time. I mean, in maybe several years, starting from 2020, probably when we had the first recession, COVID recession. So now we have this indicator going below 50 again. Now we will talk about what that particularly means for the market. So let's talk about that. Let's just make a brief summary of what we see. So we have flashing indicators of recession. We have quite high inflation. We have tightening monetary policy from the Federal Reserve. We have bond prices moving down. So I'll explain you what does that particularly mean. But that is the current context for the Q4. So in short, in summary, so we see that the money is actually going to the defense rather than to the cyclical assets. By cyclical assets, I mean some speculative assets, right? Such as, for example, stocks, cryptocurrencies, and other assets. So if we take a look at the American dollar index, which is DXY, so we've seen a massive growth throughout the first three quarters. So it's actually stopped only at September 26, 28. So now it's traded slightly below this line, so 111. So it's going sideways, meaning that the trend for American dollar is probably mature. So most of the defensive plays are already priced in. So it was growing since August, right? Since August, and even not August, sorry, May 2021, right? So already 1.5 years. So it was growing, and now it's at the new peak. So, but it's going sideways starting from the end of September. What does that particularly mean? This trend is mature. So if you want to go long on American dollar, probably it's already too late. Meaning that if you want to go short for your USD, it might be already too late too. Though, what what do we see here? We see that actually it's going sideways too. So it has the inverse correlation with DXY, with the American dollar index. So Euro USD has a very long, declining trend, and if you want to go short, probably that's already too late. However, I think that the consolidation, the sideways mechanics, sideways dynamics, is the most anticipated for Euro USD. So if you take a look at the daily chart, for example, let's build two moving averages, or 20-day moving average and 50-day moving average. We will see that it's located, right between those moving averages, meaning that that's usually the so-called dynamic resistance area. Because as you see, when the trend was moving down, so whenever it was touching this base, touching this area, touching this resistance, it was moving down. Not necessarily it will start moving down like previously today, but probably some resistance may be found here. So I mean that if you want to buy your USD, probably that's not a good point, and more logical development of the situation would be to move it to the downside. So now it's 98, almost 99. So I would not be surprised if I see Euro USD plummeting back to 0.9670, 0.97, something like that. It will be very logical development of the situation, because it's very difficult to actually stop a trend. The trend usually first turns into sideways, from bearish to sideways, or from bullish to sideways, before actually showing the reversal. So that's what we can expect. So if you still trade, for example, Euro USD, you can still open some short positions. However, I think that you have to be very cautious, because the trend is already mature. So it's not so easy to open the position here. But if you want to do so, still, for example, you can track for some chart formations. So you see that Euro USD is located in the correctional formation right now. So in case it breaks this formation, in case it tries to break the neckline of this formation, you can start moving down, something like that. It would be very logical, considering that yields of 30-year treasury bonds are increasing every day, meaning that more and more money are going into the American dollar. More people still try to buy American dollar, because the American dollar is the high yield currency right now in comparison to even Australian dollar, even New Zealand dollar. So it's still high yield currency. So that's why for many people, for many investment managers, it's still more favorable to keep money in the American dollar. That's what they do exactly, and that's why if I would need to choose, I would rather sell Euro USD than buy it, but not for the long term, maybe for the short term, as shown on this slide. Oh, sorry, on this chart. Okay, so that's one thing. So rising American dollar. So some people have been observing the massive growth of USD/JPY, or Japanese yen. Okay, yes, that was happening due to the incredible weakness of Japanese yen. But as you see right now, Japanese central bank had started to make interventions, bringing some buying back yen from the market, and we see that the volatility for USD/JPY is substantial, and probably these interventions will be happening more and more as the time goes by, because Bank of Japan will probably not stop one intervention, will probably continue to make interventions as they will see lower yen prices. So that's why I would not touch any assets with Japanese yen in the fourth quarter. Well, particularly maybe at least in October, November. I will not touch any assets for Japanese yen, because central bank, Bank of Japan, is in the game. And as you see, volatility may be tremendous, maybe substantial. You can easily be whipsawed whenever you see such an action. You can easily be whipsawed. Of course, if you sell somewhere here at October 21's peak, it would be, very easy profit and very big profit. But who knows when exactly they are going to make the intervention. So, all right. So as for Euro USD, we already know the situation. We know that it's migrating to the downside, driven by strong American dollar. What about gold? Because many people try to trade gold, or they like to trade gold. Well, gold have been actually quite, I would say, poor asset this year, so it was not protecting against anything, against the inflation, against geopolitical risks, because we see, war going on in Eastern Europe. Gold doesn't seem to react, doesn't seem to protect against any of those risks. And as we see gold plummeting, so it actually, what it does actually, so it's just completely correlated with the American dollar. So whenever we see American dollar going up, gold is moving down. So that's what we see. So, and if you put here DXY at the same chart, American dollar index, you would see that we have the same dynamics here, but inverse. Inverse dynamics. Whenever American dollar moves up, gold moves down. So that's the clear inverse correlation here. So that's why, considering that we have a strong trend for American dollar, gold is constantly under pressure, not only for October, but probably that will also continue in November and maybe in December, in the rest of 2022. However, don't forget that in December those trends usually reverse. So meaning that you can still see, gold deteriorating, going slightly down, renewing the low, but at some point in time we can see the short coverage rally liquidation may start. We may see it going back to 1800, for example. So that's why I would not probably sell gold when it shows the new lows. I would not try to sell gold whenever it shows the new low, because it would be very, very dangerous. It would be very dangerous. Otherwise, we can see immediate growth of gold. So the position of gold is actually below some important lows. If you take a look at March 2021, April 2021, August 2021, so gold is positioned right now slightly below all those lows, meaning that I think it's a little bit oversold. Well, that's a big question whether it's all oversold or not. But what I see currently is that gold is not favorable asset. Nobody wants to buy. So, is there any way to forecast the movement for gold other than just watching the charts? Of course, it is. It's commitment of traders reports. Let's see what's happening with the position of big commercial traders for gold. For that, we are going to the website barchart.com. And what we want to do here is we want to go to the futures tab, and we go to commitment of traders here, and we select gold. We go to metals, we select gold. Yeah, I get some advertisement about funded traders. All right, so let's select maybe a 10-year period, and let's just see what's visible here. So we don't need disaggregated report right here. We only need classical or commercial traders, commercials. They are represented in the red line. So the red line, the current red line, which we see here, is going up. So their position for gold is growing, growing, and growing every month, every week. So speculates the sell, but commercial traders are accumulating the position, and this commercial traders very rarely have a positive position. So they sell gold, but they don't buy gold. So they are usually producers. They sell gold. But sometimes there are situations when they are becoming net buyers. When they don't sell any gold, they become net buyers. And that was, several times within the decade. It was in 2013, it was 2015, it was in 2018. Well, basically, in 2013, for example, and 2015, those the net position was close to zero, but it was not positive. But in 2018, it was actually positive. It was actually slightly positive, but it was positive. And it was the long-term bottom for gold. Now we are heading towards zero, so I would personally monitor for this red line very, very closely whenever it comes close to zero. Now it's minus 98,000 contracts. But if it comes close to zero, that would probably represent the medium-term low for gold. So keep an eye on that. That's very, very important because on the price, we don't see any clues of the reversal, but the clues of the reversal are represented usually on the chart of big market participants. The same thing, by the way, is visible on the crude oil. I'll show you another thing. Crude oil, right? So people think, okay, what about crude oil? So would crude oil go down? And if you see the same picture, so the commercial traders position for the crude oil was growing actually. Now it's flat a little bit, and if it will continue going higher, that would represent probably the new bottom for crude oil. So by the way, we've seen the new peak for crude oil in August 2022. So that was actually the new peak. And so you see what happens. So whenever we have the new peak, so that's the bottom for the asset. And usually that works like that. So now we had the new peak in August. So now it's end of October. So I would not be surprised if crude oil maybe will start to slowly reverse into the upside, pulling back and getting back to the range, getting back to 100. Well, I understand that recession and everything prevents it from growing right now, but in case we have any positive news, in case the economy, feels better a little bit, so it would be trigger for the crude oil to immediately go up, because you see that the net position of commercial traders is actually at the peak. So they are buying and buying and buying more, so there's a deficit of energy resources. This is a deficit of the crude oil, so they are buying. So in case economy shows any signs of strength, so probably crude oil will skyrocket immediately to the upside. Okay, so but we were speaking of gold. So gold currently is in the declining trend. However, we are getting close and close to the potential reversal. So that's why I would not be a long-term holder of any short positions for gold, because this reversal could happen actually within the fourth quarter, because commodities are oversold right now, so they're driven down by the recession fears. Whenever we have any relief about the recession, the potential recession, maybe some economic indicators will be better than expected. Maybe there will be some resolution about war or geopolitical tensions. So commodities may go up, may form a new bottom, gold included. All right, but currently it's in the downtrend, so meaning that if you decide to buy it, probably you will be stopped out very quickly, because you see the number of days when it's going down actually is greater than the number of days when it's going up. So it's very difficult to take the long position for gold right now. So that's why currently, if you like, you can actually make short-term trades for gold whenever it pulls back and it reaches the resistance area. So I think that it will be sold off pretty quickly. So just follow the trade location. So don't try to chase the market. I never chase the market because I know that it's very difficult to do. But whenever it pulls back, for example, to 1675, 1674, I will do my best to maybe build the short position for gold. However, I was thinking that gold will actually retreat in October. That hasn't happened because of the situation with the bond market, because of the American dollar. So gold was actually hammered down. So okay, currently, for example, if you trade today, Tuesday, October 25, what are you expected to do? If you want to sell, well, that's not a good trade location, because the price stands quite lower than the resistance. Meaning that if you sell right now, for example, you might see some development in your direction, then it will go back to the range. I don't think that would be a good idea. So I would probably think of selling I will start focusing on short positions because in this case the trade location is much better. Okay, so that's how it works. This is a trend, right? So the trend never stops quickly. So first it turns into a sideways action, and you may benefit out of that. So you can sell some portions when it pulls back to the resistance, buy it back again, sell it again, buy it back again, and maybe at some point in time it will reverse. So that's how it works basically. So don't fight the trend actually. So that's the rule of thumb or the main trading wisdom. Don't fight the trend. Don't try fighting the trend. So let's say if you are a day trader, what are you supposed to do? So this, for example, that's the second day of the move. If you are a day trader, beware of also other trade locations. So if I trade within the day, basically I use Bollinger Bands indicator and I try to see whether my trade location is long. I mean it's low or high. I don't want to sell low. I want to sell high. So I want to sell whenever price comes closer to the area between the middle line of the Bollinger and the higher line of the Bollinger. So in other words, I would not sell here. I would patiently wait until the price comes closer to this area and I would sell. So that would be a day trading probably. So as you see, the main resistance is located above, so that's not a good trade location. But if still you want to sell, so you may do that like shown here on the chart. So I mean, so for day traders, that's especially very concerning because they usually jump in the moves. So they say, okay, the price is moving down, I will jump in, I will sell. But in many cases, that's also not a good thing to do. All right. So that's what about gold. So gold is now located in a downtrend, in a short-term downtrend. So you can still take some pullback, but the perspective probably is quite limited. So the potential is quite limited. But on the contrary, if gold, I would say, will retrace to 1675 or 76 or 80 or 70, so the swing might be much more aggressive. So the potential might be much more interesting here because that would be the beginning of the new impulse, that would be the beginning of the new swing. So, and if you capture the price at this point, so that would be a substantially more interesting trade. All right, so let's move on. So let's see a couple of more situations. For example, let's see Bitcoin because many people today are trading cryptocurrencies. Well, I would say for Bitcoin, things are very, I don't say sad, but they're quite depressing. It's not going anywhere. Well, it's not moving down. There is no panic. There is no capitulation. It's still consolidating in a very narrow range, not moving anywhere. Not only Bitcoin, but also Ethereum, but also Cardano, Solana, and all other flagship cryptocurrencies. They are not moving down. So it's kind of losing volatility. So as you see, so it's moving, within a narrowing chart formation, which is probably the triangle. And of course, at some point in time, this triangle is going to be broken. But who knows exactly when it's going to happen? Maybe it will be middle of November, maybe that will be end of November or the beginning of November. Who knows? But so I personally think that well, we still have some probability, I would say increased probability of this triangle to be broken to the downside. Maybe after that we'll find another low that it will be broken to the downside. Well, that's logical, right? Because we see such trend of growing American dollar, we see such a trend, and probably it should be broken to the downside. However, it's not clear, it's not guaranteed, because in case some optimism goes back to the markets, maybe Bitcoin will react positively. And as you see also, speaking of Bitcoin, speaking of cryptocurrencies, they have been quite stable. They have been robust. If you compare them for S&P 500 index, for example, you would see that Bitcoin was more stable than S&P and even Nasdaq. So let's Nasdaq here. I mean, stocks were moving down actually in October, August, well in August, yeah, in September, October, they were moving down, while Bitcoin was moving sideways. And that's interesting observation, meaning that, well, maybe there are some signs of strength in cryptocurrencies, so they don't move down. They don't move up too, but they don't move down, so they're kind of robust. They are not reacting to the overall, negative situation in the market, in the stock markets particularly. It's moving sideways. Maybe that's a sign of potential strength and potential recovery. So I definitely keep an eye on Bitcoin because it displays the unusual behavior in comparison to stocks, in comparison to stock indices. All right, what else do we see? What else do we see among assets? Well, this week is the week of earnings reports. So this is a very important week, by the way. So if you Google earnings this week, and well, there is a good Twitter feed, by the way, called Earnings Whispers. So for this week, uh, for the week, okay, earnings for the week. So you see there are a bunch of companies, very big companies, are posting their earnings. For example, Alphabet, which is Google, Amazon, ExxonMobil, well, particularly the big amount of tech companies, Microsoft, many other companies are posting their earnings this week. Texas Instruments, by the way, a semiconductor company. So when we have such a big concentration of earnings within 1 week, usually that's a positive for the stock market. Stock market doesn't move down before investors know the number, before investors know anything about earnings. So probably this positive effect will sustain until Thursday. So now it's Tuesday, so until Thursday evening, probably until Thursday US session, probably we will have a stock market, migrating to the upside. And that's exactly what we see right now, by the way. So if you take a look at NASDAQ, you see that NASDAQ is actually quite strong. It's showing some relative strength. It's not moving down. It's rather consolidating, but it's not moving down. So that's why if you are trading, if you're a day trader, you can use this situation. You can cautiously build some positions at the bottom of Bollinger, awaiting the stock index to actually moving down and maybe unloading your position on Thursday. That is one of the most interesting plays within this week, I think. So, but I would say that of course, you need to be a little bit of a risk taker to do that, because don't forget what we have every day, every week. We have the debt market. I don't say crisis, but uncertain situation in the debt market. So every day bonds are moving down and down and down and down, and that's not also good for stocks. Stocks don't like that too. The stock market doesn't like that too when bonds are moving down, because you can imagine that in the bond market, bond market is 20 times greater than actually the stock market, and you see that tiny change within the bond market can provoke large sell-offs or large changes in the stock market and crypto markets. So that's why when bond market was stable, stock market was actually, growing substantially, showing 50% or 100% growth within a year, especially for some individual names. But when the situation had changed, so the stock market has become different. So it's very difficult for stocks to grow. But for this week, we might see some positive, because this is the week of earnings. By the way, October is also a month of good performance. Statistically and historically, stock indices are performing at their best in October. So let me show the chart. Seasonal chart, NASDAQ, for example. Let's see seasonal chart for NASDAQ. And if you Google that, you can see the first website, NASDAQ 100 seasonal chart, equity block. So you see that October actually is the best month for stocks. And if you see seasonal chart S&P 500, you would see pretty much the same situation. So October is actually one of the best months for stocks. All right, now I think we have some time for a Q&A session. We have a bunch of questions, so let's maybe go through questions. All right. Nasir, should we translate, or I mean, we have questions in English, so I don't think we should translate it to Urdu, right?
Yeah, the ones in English you can answer, and the ones in Urdu will translate for you.
Okay, so Imran Said asks a question. Please explain me GBP JPY correlation pairs. Do you mean pairs which correlate with GBP JPY? Well, okay. So GBP JPY means that well, probably have correlation with Euro JPY and GBP USD. So, but in general, I would say in general. So if you take a look at the chart of GBP JPY, well, it correlates with other yen-related processes. For example, if you take Euro yen, you would see the pretty much same thing. If you see American dollar versus yen, you will see pretty much the same dynamics. Well, British pound has been quite volatile so far because of the actions of the central bank, because of also about debt crisis in UK, which was yields of 10-year bonds for UK was as high as 5%, I believe, and the central bank of Bank of England started to step in and try to interfere the situation. But I mean, so I would say GBP JPY is pretty much an independent instrument. It correlates with Euro yen. It correlates with USD JPY. But in many cases, it is an independent instrument. Gold analysis. Abdul asks, gold analysis at the end of this webinar. Well, we've covered some view for gold today. So I think that gold is actually well, it's in the downtrend yet, but as we see the permanent growth of net position of commercial traders, we might see some reversal point later in this quarter. But we should keep an eye on this position. So I think that commodities are oversold, so they are undervalued, I would say, a little bit. So that might be the potential reversal point. However, if you are day trading, if you are short-term trading, so it would be more easy actually to sell gold. But I would sell gold if it comes to 1875, for example, between 1870 and 1885. It would be the resistance areas. Much more. I would say much easier to build a position for gold from that area. So not touch gold or buy now. I won't be touching gold right now, meaning that if you want to sell, that's not a good trade location. If you want to buy, so you need to have some kind of logic here, but I don't see any logic for buying gold right now, so I think it's not yet the time. So if you want to buy gold with investment purposes, well, I think we should wait for a while until the commercial traders, commercial traders will reach the zero line. Maybe it will happen maybe in 3 weeks, maybe it will happen in a month, but if you are investing in gold, let's say, so you need to see this happening. But currently it's in a downtrend. Another question. I want to know, Naeem Ahmed asks a question. I want to know Elliott wave works. If yes, is there any clues to learn? Well, there is observation that Elliott waves actually work. However, it's very subjective, meaning that if you so it's very difficult to learn actually Elliott wave analysis because there are no simplicity there. Well, there are simple structure, right? The first wave, the second wave, the third wave, fourth wave, fifth wave. The structure is pretty simple, But I mean, that's not easy actually to apply them in real time, in the real charts, because there's so much complexity. Elliott wave analysts, they say, okay, the fourth wave looks not as expected, it's more elongated and yada yada yada. So when you start applying Elliott waves, it becomes very complex, I would say, because there is so much room for interpretation. And if you feel that it is your analysis which you like, so you should definitely learn that, because there are no right or wrong here. So for some people it works just perfectly. I know one trader who actually employs and works with Elliott waves, and it works perfectly for him. But for me, that doesn't work so much because I don't see any patterns in Elliott waves. So for me, that's very complex. I like simplicity more. I don't like those complex patterns because it actually it makes the decision making more difficult, especially when you put money at risk. So when you put money at risk, you need something to simplify things. I would say to not overcomplicate things. But if you feel that you like this method, why not learn it? Is there any content on the topic? Another question, Wahid asks a question. If I want to trade only 5 minute chart in a day on gold, what is the best time to analyze the market? Well, you can analyze market whenever you want, but probably the question is when is the best time for trading? Well, let's go to charting and chart of gold. Well, as you see, so gold is no different from any other instrument. I mean, in terms of volatility. So let's do a 5 minute chart here, and let's build the indicator called average true range. That's a measurement of volatility. And as you see, volatility increases when we have actually the US session. So this is the US session, for example, of the previous day, October 22. Well, it was not the previous day, it was Friday, I guess. So whenever it starts trading in the US session, so volatility increases 2 or 3 times. So you got to be careful with that. But I think that the best time to trade gold is the beginning of the European session, because with that you can capture some kind of a pivot or the reversal when the market is trying to identify the direction. For example, today, if you take a look at today's action for gold, well, it started to try, it was trying to mimic, let's say, the formation here, and as you see, it was not successful, so it was not going to break it. So you see this triangle, and if you follow these situations, you actually have shortened the range of 70. So that's one of the characteristics. So it's not the trend signal which occurs at the beginning of the European session, but I believe that that's very good because volatility is actually important. So it starts moving, meaning that you place small stop loss and actually you take a greater size, greater lot size. And at the same time, this initial local price may be down, but in 2 hours, the US session will step in and the volatility will actually increase. So you will start observing some massive price action here. So I think that it would be a wise decision to close this position, for example, before the US session starts. But it depends. Well, if you are a scalper, for example, then you may trade whenever you want, but just beware that volatility goes up during the session. When gold will be reversing the line, when exactly I don't know, but maybe it will happen maybe in 2 to 3 weeks if we see the dynamics of commitment of traders. Or to see it's moving up and up and up and up every week. So I think that in case it continues to go up and continues, big commercial traders continue to accumulate it, analyzing the downward trend, especially when you say, so the right question would be, what is the trend right now? Actually, and I want to go with the trend. If the trend is down, then my question would be, when to sell, not buy, right? Because the trend is down. When the trend will go up, then you ask the question, how can I buy over there, right? Because do you want to go with the trend? That's very important. Okay, Imran again, please explain GBP/JPY correlation. Forex, extremely sorry I was away. Can you please explain in short terms? Imran, GBP/JPY correlates with Euro JPY, USD JPY, but not as perfectly as anything else. I mean, it has independent nature because it's two currency pairs, independent currency pairs, British pound and Japanese yen. So I would not compare it with anything else. But it has some correlation between Euro JPY and USD JPY and GBP USD, for example. Well, GBP USD maybe not so much, but uh, but actually you need to understand why do you need this correlation. What are you going to do with this correlation? If you're going to just see another currency pair, to analyze another currency pair and analyze GBP/JPY, following this correlation game usually doesn't work as expected in most cases. So I would not focus on that so much. Wahid asks the question again, if I wanted to trade long time like intraday, which signal I need to follow or what trend I need to follow? Well, speaking of trends, there are several trends: long-term trend, medium-term trend, and the short-term trend. If you are trading intraday, you should be probably following, or at least short-term trend, But it would be better to align trends together. So, for example, it would be much easier if you follow not only short-term trend, but if the long-term trend is also in your direction. So for gold right now, medium-term trend and long-term trend is down. So let me show you how it works. I will show my screen. I will show you. Trend analysis is quite a complex thing because there are several trends in the market. There is no one trend, right? But first of all, what is a long-term trend? If we put here 200-day moving average, let's say, and if the price is located consistently below 200-day moving average, trend is down actually. So the long-term trend for gold is what? It's down. The medium-term trend, which is 50-day moving average, is what? It's down too, because the price is located below the 50-day moving average. What about the short-term trend, the 20-day moving average? Okay, so I cannot build it because I will remove 180 out. Let me build 20-day moving average, and then we see that the short-term trend is also down. So, but it's not that you gotta immediately sell when the price is located below those three moving averages. So, as I said, so you need to spot some change. Trading is about change. Whenever the price comes closer to this area, which I call the value area or the resistance area, so that would be the best time to sell. Actually, that would be the best time to sell. Well, why the best time to sell? Because you want to be in the early stage of a trend, not late. You want to be in the early stage of the trend. Okay, another question. What would be the lowest point for gold? Well, I have no idea. I don't know what would be the lowest point for gold because it's not about predicting. Trading is not about prediction. Trading is about following certain logics, certain rules, certain risk management, and keeping the logic in place. But we never know how deep the asset will go or how aggressively it will pull back. We don't have such ideas. We don't know the prices. So losing strength, but I don't think that it's over yet. So probably we will still see some big supply going up, at least for a period, because that's logical, because usually trends turn into sideways from growth from the decline. Muhammad, very informative webinar. Thank you very much. Very much glad to hear. Another listener, which pair most likely can be considered this week for day trading? You mean currency pair? Well, USD is good actually. Well, it's not in the risk, but still it's moving down. That would be good. But not as much as I've said, anything with Japanese yen. These days, because Japanese central bank is starting to make interventions. So don't be surprised if you see immediate volatility on the yen. It would be very dangerous, I think. Naeem Ahmed asks a question. What are things we have to avoid when trading to become a profitable trader? Well, let it be the last question, okay? Because it's the end of the webinar. What things we should avoid? Well, that is clearly I won't say avoid it, but observing risk management and money management. That's very important. Not to lose your capital, being able to survive, being able to calculate risk, being able to work with risks. Avoiding, well, risk management is also about avoiding. What you should avoid? You should avoid moving your stop losses. You should avoid over trading. That's very dangerous when you make unnecessary trades. Do only trades which you understand, which are calculated, where the risk is calculated. You should avoid anything taking too much risk, too big trading size, too big lot size, too big leverage. Because if you take the excessive risk, for example, put at risk 10% of your account in a single trade, it would be very difficult to recover once, for example, you lose 3 or 4 trades in a row. You get 50% drawdown. It would be quite difficult to get back. So I would avoid trading very aggressively in the beginning. So try to trade modestly, at least when you are just learning, because it's much more important to learn to survive when you're just starting out rather than to immediately earn money. But it's more difficult to survive. So risk management, money management, not exceeding the lot size, learning how to calculate the lot size, putting a small portion of your capital at risk, relatively small, no more than 2 to 3%, I think. And so that's number one. If you learn money management and risk management, so then you can proceed with the analysis. The rest is analysis. You can learn technical analysis, you can learn price action, anything you like. But risk management and money management is the basis, it's the foundation. Every profitable trader has it. Trading in crypto is good or not? What would be a strategy for 5-minute trading in crypto? Trading in crypto has been very good for the first half of this year, but now crypto is a little bit down. So as you see, I told you this market is not really high, so it's kind of consolidating a very narrow range. And currently, for now, that's not a really interesting market. But I think that in the future, maybe even in this year, volatility will come down and this market may be very interesting. But currently, no, I don't think it's very interesting market because there is nothing really interesting happening in crypto. I mean, gold is much more interesting, or Euro USD is much more interesting right now. But it was really interesting, May, in June, or in April, and even in July. But starting from August, it starts to diminish. Volatility starts to diminish. All right, so thank you very much for joining the webinar. I think that we're running out of time, so maybe next time we'll dedicate more time to your questions because I see that there are many questions that are rolling in. And yeah, so now I think we should say goodbye and wish you good trading, good luck, and wish you managing the risk and keeping risk under control. So that's an essential. That's the recipe of, well, not the recipe of success, but the recipe to keep above water, to actually to be able to survive. It's very important, especially in today's markets.
Thank you very much, Stan, for your time and for all the inputs and the analysis. Further Abdurrahman, उम्मीद करता हूँ कि आपको आज का हमारा वेबिनार इंटरेस्टिंग लगा होगा और आप इस सर्वे अब हम शुरू करें इलेक्शन के लिए सर्वे आप शुरू करें सर्वे फॉर्म और अपनी फीडबैक से हमें आगाह करें और इसमें जो इंटरेस्टिंग आप टॉपिक्स हैं जिसमें आप चाहते हैं कि हम फ्यूचर में ये टॉपिक्स कवर करें तो वो ज़रूर हमें बताएं ताकि आपकी फीडबैक के ज़रिए हम अपने वेबिनार्स को और बेहतर और इंटरेस्टिंग बना सकें.
Yeah, thank you very much.
Thank you. हमारे नेक्स्ट वेबिनार जो है 8 नवंबर को है तो उसके हवाले हम आपको ईमेल भी कर देंगे. इसके अलावा हमारा सोशल मीडिया पे भी अपडेट्स आती हैं. हमारा फेसबुक पेज जो है, इंस्टाग्राम पेज है एक्सनेस पाकिस्तान का, आप ज़रूर फॉलो करें. अपडेट आती हैं, अपने आप फीडबैक से भी हमें आगाह कर सकते हैं. तो उम्मीद करते हैं कि यू हैव a good trading week moving forward और all the best for trading. जो टिप्स स्टैन ने आपसे शेयर की हैं स्पेशली रिस्क मैनेजमेंट के हवाले से वो ज़रूर फॉलो करें. हम यही चाहते हैं कि आप एक एज ए सक्सेसफुल ट्रेडर ग्रो करें और लॉसेज आपके मिनिमाइज हो. बहुत बहुत शुक्रिया सबका. बहुत ख्याल रखिएगा. अल्लाह हाफ़िज़.
Yeah. So, yeah, good luck. See you later. Bye bye.
Okay, thank you, Sam. Bye.
Recording stopped.